Investing in the stock market offers individuals a way to grow their wealth over time and achieve financial goals. For beginners, the primary objective is often to build a foundation for long-term financial security, whether that's saving for retirement, funding education, or accumulating assets. The stock market provides opportunities to benefit from company growth, dividends, and compound returns. While there are risks involved, learning the basics can help new investors make informed decisions and harness the potential of the market. Understanding these goals and benefits is the first step toward becoming a confident investor. The stock market is a marketplace where shares of publicly traded companies are bought and sold. It operates through exchanges, such as the New York Stock Exchange or NASDAQ, where investors can purchase ownership stakes, known as stocks, in various businesses. Key terms include shares, which represent units of ownership, and dividends, which are payments some companies make to shareholders. Prices in the stock market fluctuate based on supply and demand, company performance, and broader economic factors. Understanding these basics helps investors navigate the complexities of buying and selling stocks. Stocks represent ownership in a company and are primarily categorized into common and preferred shares. Common shares grant shareholders voting rights and the potential to receive dividends, though these dividends are not guaranteed. Preferred shares, on the other hand, typically do not offer voting rights, but provide priority when it comes to dividend payments and claims on assets in the event of liquidation. Beyond these basic categories, stocks can also be classified by market capitalization, sector, or growth potential, each offering distinct risk and reward profiles. Understanding these differences is essential for making informed investment decisions. Stock prices are shaped by the dynamic interplay of supply and demand in financial markets. When more investors want to buy a stock than sell it, the price tends to rise, and vice versa. Several factors influence these movements, including company performance, economic indicators, industry trends, and investor sentiment. News events, changes in interest rates, and global developments can also cause significant fluctuations. By analyzing these elements, investors aim to anticipate market shifts and make informed decisions. Stock exchanges are organized marketplaces where buyers and sellers trade shares of publicly listed companies. These exchanges, such as the New York Stock Exchange or NASDAQ, provide a regulated environment that ensures transparency and fairness in transactions. To buy or sell stocks, individuals typically work through brokers, who act as intermediaries between investors and the exchange. Brokers can be traditional firms or online platforms, offering tools and guidance to help investors execute trades efficiently. By placing orders through a broker, investors gain access to a wide range of stocks and can participate in the financial markets with ease. For those new to investing, understanding the basics is essential. Long-term investing involves holding assets such as stocks or bonds over several years, allowing them to grow in value and potentially weather market fluctuations. Diversification is another key strategy, which means spreading investments across different asset classes to reduce risk. By combining these approaches, beginners can build a more resilient portfolio and increase their chances of achieving steady returns. Starting with simple, well-researched choices can help lay a solid foundation for future financial growth. Before making any investment decisions, thorough research and analysis are essential. Understanding market trends, evaluating financial statements, and assessing the potential risks can help investors make informed choices. This process allows individuals to identify opportunities and avoid common pitfalls that may lead to losses. By dedicating time to gather and interpret data, investors can build a stronger foundation for long-term financial success. Ultimately, careful research and analysis serve as the cornerstone of responsible investing. Investing in the stock market comes with several common risks, including market volatility, economic downturns, and company-specific issues such as poor management or declining earnings. These risks can lead to fluctuations in stock prices and potential losses for investors. To manage these risks effectively, diversification is key. Spreading investments across different sectors and asset classes can help reduce exposure to any single stock or industry. Additionally, staying informed about market trends and regularly reviewing your investment portfolio can help you make timely decisions. Setting clear financial goals and maintaining a long-term perspective can also provide stability during periods of uncertainty. To achieve long-term success in investing, it's important to stay informed and continuously build your knowledge. Regularly reading reputable financial news sources, attending webinars, and exploring online courses can help you keep up with market trends and strategies. Joining investment communities and forums also provides valuable insights from experienced investors. Remember to review your portfolio periodically and adjust your approach as needed. By leveraging these resources and tips, you can make more confident and informed investment decisions. In summary, we've explored the essential principles of investing, from understanding risk and diversification to setting clear financial goals. By starting early and staying informed, you can harness the power of compound growth and make your money work for you. Remember, every investor's journey is unique, and taking the first step is often the most important. With the right mindset and a commitment to learning, you can build a foundation for long-term financial success. Now is the perfect time to begin your investing journey and shape your future.